The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Darrell Martin.
Welcome back. Welcome, folks. Darrell Martin, Tom O'Brien. We appreciate you growling and prowling out here with us. Right now, we get the Dow Industrials up by 204. Nasdaq is up 56. S&Ps are up 29. We have gold down 770, trading at 1,233. Silver down 16 cents at 17.27. You get bonds. The 10-year down 16 ticks at 127.17. 30-year off 24 at 142.22. King dollar up 244 ticks. 85.22, and the euro is down 49 at 127.60. Folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN to see the banner on the top, on the side. You can bring it up. They'll put $25,000 of paper money into it. You can test drive it right here, right now. And, of course, don't forget, at TFNN, we do live content every trading day, 8 o'clock in the morning to 6 o'clock in the evening. We'll replay that. Our man, Mr. Darrell Martin, has an outstanding show every trading day, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform. Darrell Martin, what's going on?
How's it going, man?
It's going great, man. How you been?
I'm doing great. I got to start off the show. And this, my daughter can't hear it right now, but I can always play it back for her, right? Tell her happy birthday, Felicity. You know Felicity.
Happy birthday. That's right. Big time.
She's turning 8 today, so and she's all excited that the school I went to, she goes to now.
Oh, okay? Isn't that cool?
It's a private school from elementary all up to senior high and all that.
That is cool.
And their homecoming is tonight.
Okay.
And Felicity's a cheerleader. She's in choir, all that.
Yeah.
So they have a big parade for homecoming, so she gets to be in the parade. So it's her parade on her birthday. She's all excited.
How cool. Well, that's exactly what that parade is for. It's for her birthday.
That's what she thinks it is.
Perfect. That's all that matters, man. That is awesome.
Yeah, so it'll be a lot of fun. You get to wear her cheerleading outfit all day, and then get up on the parade, wave to everybody, and all that. And
that is great, man.
It's exciting. Gonna have a little horse party, of course. She loves it, riding those horses and everything. So gonna have a horse party tomorrow with all of her friends, and it'll be good stuff.
That's awesome, man. It's really cool that she's going to the same school you went to. You got to dig that too, right? You just going back to that school. That's pretty cool, man.
I know. So it's like we went in, and I was whenever we were looking for what school for her to go to.
Yeah. And
I was looking around, and I was like, go check out, where I went and all that, of course. I mean, it's about 15 minutes from where we live right now.
Sure.
And
that's great.
There's light years away from where it was 20, 30 years ago, whenever I was going to school there.
Yeah.
So it's really cool to see, not 30, but 20. But anyways, whenever I was going there, and I mean, like, they have iPads, and they're, in like first grade. And they do reading comprehension tests. It's pretty cool. So they'll go and do the library. And then they'll come in and they take a test on their iPad, which has all the questions from the book, and they get credit for it. And if they get so many credits, they get prizes at the end of the semester and stuff like that.
Yeah.
And she reads like crazy. I think she's read more books this year than I probably read like during high school. So
how good is that, right?
Yeah, she loves to read. Man, that girl is always in a book.
Hey, let me ask you something, right? Folks, we're talking about the Nadex platform. When you what has happened? Oh, I got it. 1 second. Hey, sometimes I lose my box, my buy or sell box. Yeah, see, I'm losing it right now. I'm trying to. Oh, I see what I'm doing. I got it. Okay, man. What happens, and this is good for everyone to know, I guess. If you get a buy or sell box, folks, if you don't realize it, what happens sometimes, Darrell, right, is that it gets up at the top, and I don't realize that on the side I've already brought my side box down. Do you know what I mean? So I can see the rest of the contracts.
Oh, yeah.
Yeah. So.
And then another tip for you too, like now you're talking about if you're in the obviously if you're in the scanner, you don't have to worry about it at all.
Right, which is important. No, I'm with you. Right.
And but also another tip for you is I don't know why they do this. It doesn't make really any sense to me at all. But over here, like, let's say you're looking at the indices, or look at US 500.
Yes.
And we'll say we're on the dailies or something.
Okay.
If you click on display, you can say how many you want to see per page, and they default it to 20, but there's 21 contracts.
Okay.
And so if you'll click on in your markets tab right there, if you'll click display, and then in the drop-down box, choose 50 per page.
Oh, let's do this again. Tell me, start again. Okay.
Okay, so go to your mark, click any hour you want to. Click daily 415s.
Okay.
On US 500. For example.
US 5. Let me get that because I'm on gold right now. Because it looks to me. Okay, so let me get this US 500. I got it. Okay.
Okay, and then click on so you have the markets section there. Click display on the right side in the market section.
Okay, 1 second. Let me find that.
It's like at the very top, like if you find the markets window.
Oh, I got it. Okay, yep.
And then when it says number of rows to show on this panel, it says 50 per. Like I say,
I get 20 per page right now. Yeah, okay.
Make it 50, which doesn't sound like a big, except for lately we've been moving so much, we've been moving past these, and you need that. Sometimes you need that one strike.
Okay, that's good to know. Okay.
And then you can click display again, it gets rid of that. You can also get rid of columns and stuff. It makes it really easy to customize it.
Oh, that's cool. Okay.
And then in the top right under manage charts, you'll see layouts.
Yep, I see that. Okay, manage charts.
And then you can go in and you can save it.
Oh, nice.
As whatever you want to.
That's what I just did.
And that could be your
choose your layout
standard
name.
Layout.
Okay,
yep,
cool,
right.
man. Okay.
Yep.
Okay.
You got it.
Yeah.
And then that way you can save that layout so you don't have to redo that thing every time. I mean, the worst thing you have to do is do it, and you can log into from any computer, and you can choose that layout, and then you can get your whole desktop how you want it.
Yeah, which
and then have that there.
Okay.
Yeah.
Man, that's great to know. Okay.
One of those little tips that does pay off. So
it makes a huge difference because I was just what happened. When I left this yesterday, I must have somehow left it with. I was halfway down on the right hand side, so my boxes kept not disappearing, but I just had the bottom of my boxes. I'm saying to myself, what is going on here, man?
Yeah.
Okay.
So of course you don't ever have to worry about it with the scanner, which is nice because it'll auto-update it, refreshes, it keeps them all on there. It always shows all 21 if they're there. Yeah.
And what happens, folks, is that once you get this program up and going, Darrell has an outstanding scanner that hooks right into the platform, into the Nadex platform. It's not going to tell you whether to go long or short. What it is going to do, though, in a split second, is give you the best contract that you should be trading for the strategy that you want to trade at, which is absolutely huge, man. I mean, there's just no doubt about that.
Well, and sometimes it literally, not only the best, it's like literally, I mean, not only is it the best, but it literally can make all the difference. Like, we saw contracts last week that were 2 ticks apart.
Right.
Where you actually got you got the exact same risk, but, they're a little bit wider. So, I mean, sometimes those 2 ticks can make all the difference in your winning or losing.
Yeah, right.
And on the trade. So it's, I mean, it could, 1 trade, 2 trades, just a single contract can pay for itself,
I'm trying to figure out something. So let me ask you something. I think that these boxes did the gold box just change overnight, or am I doing something different? Okay, so I'm trying to go into the 1232 to 1247 right now, right? But what's happening, I must have this displayed differently. It's not telling me what my risk reward is. I'm hitting it.
Are you talking about the platform?
Yeah.
Let me see. Let me go to the platform. I don't ever use the platform. Commodities, bull spreads.
So let's see. I got an hour and 45 minutes. I'm going to buy it. And I've done something different here.
Oh, you mean there's not, like, you click the plus button and they don't show up anywhere, or what do you?
No, I got the buy, and all it says is it says buy, the price.
Oh, you don't have risk reward. You don't ever get risk reward on the platform. You only get that if you open a ticket up.
Yeah, no, I got the ticket open. That's what I'm saying. Oh, I got it. They did change it. Oh, this is cool.
These are the new tickets. Yes.
Yeah, that's a new man. I knew I wasn't seeing. I got it. So okay, so folks,
now your max profit, max loss is at the bottom.
It's at the bottom. I got it,
that's
folks.
Right.
Okay, so here. Oh, thank you, God. Thank you, Darren. No, seriously,
you're not insane. It's okay.
I'm saying, well, this is important, folks, because what happens is that when you get used to a system, I'm looking, I'm saying to myself, hold it, what am I doing wrong? But that what
they added is they gave you 5 levels of depth.
Yeah.
Okay. Or you can just look at top level if you want a small ticket.
Yeah.
You click on that depth right there. They give you 5 levels of depth with right now doesn't make a difference, but anyway, that spread's tight.
Right. Yeah, it is tight.
And then max loss, max reward, floor and ceiling on left, right, and then here's a big thing they did. If you click on the bid price or the offer price, it'll switch the direction of the trade.
Yeah, no,
and a big mistake people would make is they'd go, "Oh, I want to buy. Oh, I like that cheaper one. I'm going to buy the cheaper one," because they just don't know bid offer because they're new.
Okay, right.
And they're like, "Wait a minute. I clicked on 1240.1, but I want to buy. Why did I go to sell?" It's because clicked on the bid, and so they made that automatic. And that's really about all they added. I mean, really that bid offer and then a couple more depth windows right there.
And what happens, folks, is that the max loss and the net max profit is down on the left-hand side. It's actually set up nicer, actually, because what it gives you underneath that is it gives you the floor at the bottom. Like right now, the one I'm looking at is 1232 to 1247, and it gives you a max loss. In this case, it's $27. The floor is 1232.50, and the max profit is 123. The ceiling is 1247. So that's the type of trades risk reward that you're looking for. The real question is, if we go over to this gold contract right now and we take a look at it. So they pushed gold back. This is a typical Friday deal.
So you're at the 11 a.m. 1232, 1247.
I'm at the. One second, hold it. Yeah, I guess I am. 42 minutes. No, hold it. Is that 1 hour? No, it's 42 minutes. I'm going to look at the 10 to 12. 1 second. Here, let me get into this first. Okay, so yeah, that's what that was. So if I go to the 12 p.m. 12 p.m. Yeah.
Yeah, tell me what setup you got. We'll find it quick.
Okay, so 12:32. Yeah, the one that I'd be looking at, hour and 42 minutes left. 12:32. Yeah, that's a good deal. That's a $21 risk for $129 gain. What we have to see first, though. So watch what gold's doing here, folks.
Okay, 12:32, 12:47, 12 p.m. There you go.
So gold's coming back into the 12:30 mark, and that 12:30 mark is from the expansion at 0840 on the 15th. That's what's happening right now. So at 32, the bottom of this box, we have a 25. Let me just see what that 25 is. That's probably way too much risk. So the 25, yeah, see, that's too much risk right now. The 30, it's going to get interesting because the 32, if it gets down to 30, I guess out of that money is not as cool as it is right in the money. That's for sure. 10 minutes. Let me see what we get. We get 2 minutes left on this bar. And what you're looking for, folks, is what it's doing is coming right back into the sign of strength that it had. So, yeah, this is not bad. It's still gonna wait a few more minutes. So, volume-wise, you get 3,600 contracts versus 6,500 in the last 10-minute bar. So I'll wait another minute here. Yeah, and see where that shakes out. Because so if we go over to the Dow, the S&Ps, I'm sure we'll run through that, but I'm sure those premiums.
S&P's already up a deviation right now.
Yeah, those premiums are going to be good out there. Darrell Martin, Tom O'Brien. Our phone number is 877-927-6648. Right now, you get the Dow up to 226. Nasdaq's up 60. S&P's up 32. We're going to be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, we get the Dow Industrials up 218. Nasdaq's up 58. S&Ps are up 31. And, folks, if you haven't test drove the Nadex platform yet, come on over to our website at TFNN. You can see the banner on the top. On the side, you can bring it up. They'll put $25,000 of paper money into your account, and you can test drive this each and every trading day. Our man Darrell has an outstanding show every trading day, 1 Eastern Standard Time. Some of the high-volume equities that we have out here with this bounce is that you get, let's see, we have Halliburton is up 292. Some of these oil and gas that have got croaked, they're up some big numbers. Schlumberger is up $6. Urban Outfitters is getting smoked. Google, which was down $25 last night, is down $4 right now. Google had hit the 505 mark last night. She's traded this morning. You talk about volatility from the 543 mark to the 528 mark. So bottom line is that we're in a nice, highly volatile market. I expect what you're looking at here, and this is really unusual for a Friday and a down week, folks, is that you can get a bounce, number one, and that this will be setting up the B to C. The A to B leg is 199 points. So bottom line, I know, man, it's intense. Nice. It really is, you know. And when you look, you know, if we if you're looking to set up a few trades for next week, folks, inside the Nadex platform, what you want to be looking at, so your A point on this S&P is 1219. Your B point is 1820, which is just amazing. I suspect, this bounce on the cash can get somewhere about 1904. Excuse me. So,
Hop it on back up, huh?
Yeah. Well, we'll get the confirmation today, because this is what ends up happening. It's really unusual that you can get a bounce going in a down week, number one. If you have the bounce and it stays, which I'm hoping it does, and with light volume, your probability is getting much higher that that's what we're in, a very large ABC structure on the way down. So thus far, if we look at the NDX 100, we take a look at the Qs, they're cooperating. They're up $1.52, 21 million shares, and you basically got down there with 108 million. You're going into 80 million. You take a look at the SPY, the SPY, and what you want all these in harmony, folks. The SPY is really cooperating. The SPY is up 259 with only 55 million after going south with 380 million, and you're going to be going into 189 million. So we'll see how this bounce operates. And what you do have cooperating also, folks, is the financial press, because the bottom line is that they have changed their tune so quickly. It is absolutely amazing. Yesterday they're saying, do you think this is a bounce? Do you think we should buy it? And the whole, it was pretty wild listening this morning to CNBC. They had Rebecca Patterson on, and she's, I think she's with one of the big firms. And then they had a guy from BlackRock on, and so Rebecca's saying, oh, well, we're buying right now. We've been calling all our clients yesterday saying buy, buy, buy. Well, of course, that's all they're going to say is buy. That's the only way they make money. I know. It's crazy. I mean, it really is,
Your broker makes you a broker.
And you want to remember those. You want to remember those quotes, folks, okay? Because, what you will see is that they'll change their tune on the next leg down, and they'll basically claim they won't claim that they didn't say it, but they will claim that they were saying something different. Because that's just how it goes, which is really sickening. But I was surprised this morning of the key that they were saying yes, and the guy from BlackRock was caught off guard just a little. I don't think he wanted to go along with it, but he didn't have to, but because of the way that the business is operated, folks, he did, which was really great. It was like, oh, really? And see what that's about. So watch what that's about, folks. They're saying that they were calling yesterday to buy because the futures were up this morning.
Right.
Yeah, so.
Well, it's so funny when you're reading this commentary. You're talking about the market commentary and people put stuff out there, and because I pay attention to the news all the time.
Yeah.
And so I'll see a story like oil drops on better than expected inventory report, or whatever, that type of thing, and I go look at it and I'm like, oil was already down when the report came out. It went down like 15 cents and then like shot back up like 50 cents right after the report came out.
It's amazing to me, they're blaming this downdraft on Ebola. It's like, oh really? Like, you're out of your mind?
They are so bored.
Oh man. Darrell, Tom O'Brien. Dow Industrials right now up 241, Nasdaq's up 65, S&Ps are up 34, gold is down 830, you get silver down 19 cents, bonds 10-year down 17, 30-year off 29. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. EverBank is a member, FDIC, and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah,
you know?
no, that makes sense, right?
But you know, like if like it gets out that it's on, like people on the flight got sick on that, you know, the nurse who flew and stuff like that. Like I think then we're gonna get like, at that point then the freak out starts.
Yeah, well, there hasn't been a lot of common sense used, I can tell you that, because what just came across the tape here. So check this out.
Yeah.
So our Carnival Cruise Line left Dallas, okay?
Oh no.
And listen to this. This is sick,
Well,
folks.
it's not that like Galveston, you mean?
Yeah,
we don't have an ocean.
Okay, well, yeah, it must be. Let me just. It's coming back to Texas somewhere. But the bottom line is that one of the lab workers who was self-testing, right, who was involved, got on the cruise line, and so now he's not sick. Okay, but the bottom line is that, oh, really? You just went on a cruise with 5,000 people, and so they just quarantined him. This just came across the tape. It's like, you got to be kidding me, man.
Him or the entire cruise line?
No, just him. They quarantined him.
Oh, I was about to be like, if the guy's not sick, that'd be like the best scenario. I'm sorry, but you're going to have to stay on the cruise for another 4 weeks.
Yeah. I'm telling you.
Wow.
So hey, okay, so market-wise, when we're talking the Nadex platform, right, let's talk about the platform, the scanner. Like right now, you know that, and this is what's really cool, folks, about this scanner, is that we're at a 1 deviation. We're probably over that 1 deviation a little right there.
Talk about the S&P right now?
Yeah, right.
Yeah, we were at 1 deviation at the start. We're probably sitting right, I think, a little bit above that. I think you're right.
And so what happens, folks, is this, is that if you happen to be trading that bounce out there, well, guess what? You want to take money, because your probability is there that, you know, can you go to 2? Yeah, you can, okay? You can basically take your stop, you can put it up. But if you're on the platform itself, you got to remember that these things are options, okay? And that type of money you want to take down, you know? And what you certainly don't want to do, well, is that you don't want to go long or short when you're at 1 deviation, even though, you know, this week you could have went short at 1 deviation because it ended up going down 3 deviations, right?
Yeah.
You know.
Yeah, if I do go short at a deviation, I make sure I have some sort of confirmation first.
Yeah.
One of the original systems I taught, actually on TFNN, was using the deviations with 10-minute bars.
Yes.
And I'm like, okay, when it closes above a deviation level, when a 10-minute bar closes above it, I'll trail my stop up.
Okay.
And then until it crosses back below the last bar that closed above,
yes,
then I won't go short.
Okay.
So like right now, like I'd have a stop like right over here, below 1878.5. So like just below that, like 5 ticks below it is where I'd put it.
I see.
And so until it hit, you know, what would that be? It'd be 1877.25.
Yep.
That would be my clue that I could actually look at starting to go short.
I got it.
So right there.
Okay.
So
cool.
every time it goes above a deviation. But yeah, we're just on the line. Right now, 1 deviation is 1878.5.
I got it. Yeah.
We're just a few points above that. And I mean, I was looking at this morning, so it's going well. I'm pretty excited about it. But just got to tighten it up all the way up, and let's see where we at right now. Yeah. So yeah, it's going well. So just keep. We'll see if it keeps trucking. But I don't have a big expectation, like you were just talking about, of it to go much further. I was getting an 1872, and I was looking at 1878 because it was my first target to tighten my stop, because that's a deviation, right?
Right.
And then from there, I was going to 1883 for my next tightening stop, and we just hit 1883. We passed that. My next one, 1890. I don't know if we're going to hit that or not. So that was my final and third target. Like at that point, I'm done.
Right.
So.
Yeah, I think it's done for today. I mean, you can get some kind of a bounce going next week, but I think it's done for today.
I was really hoping to get 1892, because that was going to be like my strong short right there if we hit 1892.
Oh, listen, this is when it's wicked, folks. So that if you're a bear, you really want it to bounce. You know what I mean?
Yeah. I know. I'm like, come on, hit 1892. Yeah. Because if it does, then I'm short.
Well, and you also have your back against the wall, which is dynamite, man. Because the wall there, folks, the first wall, if we're talking the 1892 there, what you're going to see is that the first wall, you just take the lows that were generated out there in August, and that's 1904. So it's not the end of it, you know what I mean? There's real action there that it's going to, as it starts banging into that level. The ultimate would be 1925. Be pretty tough to get that far, but when you get a 200-point ABC structure on the way down, and this is the first time that I've seen an ABC structure that is approaching, well, it's 199 points, that has been that large, folks, since 2008. That's the bottom line. So, I remember the first time this came.
Well, this has felt like 2008 the last couple days.
Oh yeah, no, and if you get, and this is what is going to be really dangerous, folks. If we get this bounce, so watch this. I'm going to set up the bearish and bullish scenario. The bearish scenario is that you get the bounce. Today it looks like we're going to have lighter volume. Monday and Tuesday you get the bounce that has lighter volume, and then we come off that with big volume. That is going to be a monster. That's going to be a confirmation that you do have a market that is like 2008, okay, in a big way, because if you're going to come down 200 points, that means we're going to be into the 1700 area in the S&P off 2020. Okay, that's a big hit, folks, very quickly, because you got to remember something. A to B and C to D, they're straight line moves, okay, so it's fast and furious. Now set up the bullish one. The bullish scenario would be that you come down and test the bottoms very quickly next Monday or Tuesday. And if you do that, and you do it with lighter volume, then the market would have a chance to basically recoup the damage that it's done. The reason being is that when you come back down and test lows after the amount of energy that we already had, and you do that very quickly, guess what? It runs out of energy, folks. You know, so if you're
that's sort of what happened yesterday too.
Yeah, exactly. That's what it was doing. That's exactly.
Like I'll pull up yesterday's chart here, and this is pretty sweet. I love these deviations, and it's funny because when I talk about it, I'm like, I can just imagine hearing somebody else say this. But I'm like, they're so good every day.
Right.
And but it comes right down to one deviation, like right there, just oscillates right at -1.
I got it.
And watch it just run right. And that was at 1823. And then it runs right up to, on the dot, 1870.
Yeah.
You don't get a prettier chart. And it's just calling the deviation move down and then the deviation move back up. And then it just falls right off of it.
Yeah, it does.
Then we go into this morning, right here, and then bam, runs right up to one deviation, and now we're doing that little oscillation dance.
Right.
So, it's helped me so much in having a realistic profit target, having a point to say, hey, you need to tighten your stops, don't get too greedy.
Yes.
And, be on the lookout for a reversal. Doesn't mean just take it, but I really start paying attention for a reversal at that point.
Yeah, because so watch this, folks. This is pretty cool, and I've always liked these. The deviation, okay, you can look at a regular and there'll be nothing in the chart. And there'll be particularly nothing in the chart right now for an intraday trader, which is dynamite, okay?
Yeah, you got to have it as an intraday trader.
Yeah, so what happens, just to run you through that, folks, when I just brought the S&P up, and I'm saying, okay, it's 1904, you can see before that, there's nothing that the chart can hit. Well, what there is what Darrell's talking about, is the deviation level. Mathematically, it can hit and come off that in the middle of air. And that's important to understand, and those levels, it's a powerful aspect when you can't see something on a chart.
Well, I learned this from a floor trader who traded on for years, and he traded options, and he was a gamma scalper.
Yes.
And so he'd go over, he'd get his options on, he'd go do a short strangle or whatever. And then he'd walk over to the floor, and then he'd basically, when he hit a certain point, he would, delta neutral out back and forth.
Sure.
And, it was so massive because he didn't have charts. He's on the floor.
Yes.
Not the floor like it is now, where there's 1,000 computers around.
No, I understand.
A little bitty pit, but back when there wasn't 1,000 computers around, and he was just in the pit.
Yes.
And so he would just sit there and he'd just wait, and then when it came down to his delta neutral point, he knew what all of his delta neutral points were.
Yeah.
He's like, okay, when it hits like a deviation, I'm going to neutralize off, because he expected it then to bounce up, and that's where he's going to grab his gamma scalp. And it's really cool. I'm really glad he shared it with me. Now, I don't use it for gamma scalping. I'm not as big on gamma scalping, but I've done it before. It doesn't move enough for me.
Yes.
But as far as the idea, I got the idea a couple of years ago, and I'd use it to plot like maybe one level up. But I'm like, I wonder what happened if I plotted everything out. And then I started noticing it every day. And people go, well, how's this any different than, support resistance? Well, it's not just that guy's formula. It's literally, algorithms are using statistical models based on option pricing to decide when they should stop putting in buys.
Well, what's so cool, man?
Things like that.
So cool is that it's the aspect of not being based on support and resistance, there is no support and resistance right now. So it's right in the middle of it. And this is the best example that, guess what? It's not based on that. It's based on the mathematical formula that how fast something can move with energy on a normalized basis, you know, which is really cool. Because those pit traders, folks, okay, the bottom line with pure pit traders, you know, before these computers even came in, the guys that were really successful, they're math geniuses. There's no doubt about it, man. They can what they can do in the matter of seconds. They knew where everything is, okay, and they only had to make, you know, 1/10, 0.2% on a continual basis. But that's what it is. If you ever seen it, you know, I mean, one of the math geniuses out there, no doubt, was Tom Sosnoff. I mean, I watched him in the pit.
Oh, yeah.
I mean, he was.
Well, I mean, Tom Sosnoff uses implied volatility for everything.
Yeah, I mean,
you know?
yeah.
And if people like, you can plot these, you know, pivot level, like traders floor pivots. You know, you'll see inside platform. They're not using the floor pivots. You know, I mean, some of them would use that, but like you said, the really good, the really successful ones, like Sosnoff and stuff like that, would go in. And they knew their options. They knew implied volatility. They could use that to trade futures. They could use that to trade, you know, stocks or whatever.
Right.
And the big thing for those that don't know about, like, what are these deviation level pivots, whatever you want to call them?
Yes.
We're not using yesterday's pricing to determine those levels. We're not using yesterday's volatility to determine those levels. We had an example the other day in the pit where we actually saw the deviations dropped by 30%. You know.
Yes.
And like in one day, you know, then they went back out by like 70% like the next day. And how do they do that? Because if they're not using the previous day's volatility, how do they, you know, expand and contract so much on a day-to-day basis?
Sure.
And what it does is, you know, insurance costs more money whenever you have more wrecks.
That's right.
Right?
That's
or somebody expects you to have more wrecks. Maybe you have no wrecks, but there's a big expectation you're going to. And so options cost more money when there's an expectation of more movement.
Right.
And therefore, we basically just go, okay, well, what's all that extra cost in the option? That's the expectation of movement. We pull that expectation of movement out with, you know, a really complex formula, but we pull it all out, and then we go, okay, well, where did it settle yesterday? Okay, so what's the expected movement in the next 24 hours based on the options market? And then we just plot it in black and white for you and make it really simple. But I don't know. It amazes. I mean, it sounds funny, but it actually amazes me every day.
It does. Listen, man. What's so cool about the market is that we all should be amazed every day. Seriously, right?
You're right.
I mean, because no matter how long you're doing this, folks. Okay, you know, the bottom line is that when markets start moving fast, they bounce off these numbers and they do it fast and furious. And you know, you're going to see days that can actually be flat. That will have movement of 200 up and 200 down that you're going to do very well. And the bulls and the bears, as long as you understand what you are, and meaning specifically, folks, is that if you're out there trading, well, trade. Don't basically just sit there. Because the reality is that on days that are like that, you can flip those positions around.
I know, and it makes me so sad, because sometimes people are like, man, this is just like day traders that I know. You know, usually newer ones. But they're like, I mean, there's one guy who's been trading for like a year or so, and I guess he just hadn't been through enough volatility, but he's like, oh, man, this is too volatile for me. I'm going to have to back off. And I'm like, well, there's some wisdom in that, but, man, this is what you live for.
Yeah, that is only, that's someone that is bullish at all times. That's what ends up happening. It's just, no, it's sad. That's what happens.
Right,
that's what happens. Darrell Martin, Tom O'Brien, you stay right there, folks. We'll come right back. Dow Industrials up 223, NASDAQ up 53, S&P's up 30. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. We're talking with Darrell. We're talking about the deviation levels, and bottom line is that you can see it gets up to those levels, folks. You back off slightly, and the type of energy that this market had on the way down gapped forward this morning, and I expect you're gonna hang at these levels, and we're gonna hang at these levels with light volume. You know, when you look at the indices right now, we have with the indices is that, there's no doubt. This has been the lowest volume day we've had going back 6 months. So this is pretty wild, and that's on the NYSE. On the Nadex, same deal. You know, what happens is that
volume dropping all down right now?
Yeah, on both of them. You know, what happens intraday, I can bring this up, and if there's a L beside it, it's telling me that's the lightest for the last 6 months. You know, and that's what, so at this time of day, it averages out, folks. This time of day, that is where we're basically, that's where we are right now. It doesn't mean it won't change, but that is where we are, and that's the speculation that basically we're looking for too. You know, so.
Well, I mean, I think a lot of people have been. I mean, the longs have been taken out, the shorts have been taken out, the profits have been taken. It's like I don't think there's. I mean, do you think there's a heavy position like? Are people really leaning one way right now after all this volatility? So is there a whole lot of need for short or long covering going like right into the close on this Friday after all this massive move?
There's
because like when it's going up, a lot of times we'll get the longs covering their. So Go ahead.
No, there's not. But what I don't go along with, you've heard in the not what you're saying, but in the financial press, folks. Okay, you hear on a continual basis that that big downdraft was all the hedge funds over leveraged. Okay. It ain't even close, folks, okay? That's like a joke, okay?
Right.
It blows my mind between blaming Ebola and hedge funds being over-leveraged, okay? They might be over-leveraged, but guess what? It's the retail, investor that's over-leveraged in a huge way. The hedge funds are going to basically push into it. What happened is that when you start breaking the August lows with volume, anyone, even hedge funds and operators, they know that you throw everything at it. And then, if you're a trader, that's it. You're throwing everything at it. You say, man, that's it. I'm going all in. And meaning going all shot, and you start hammering the market. That's what basically drives markets lower. Just as you bulls drive markets higher, well, guess what? When there's certain breaks that come in, you can take higher risks because you've just already made money. Because when you picture something, you hear that the bears on a continual basis, and they have been, like the last 4 or 5 years, have been tough. There's no two ways about it. But the bottom line is that what has just happened in the last month, okay, is that the last month, bottom line, you're a bull. Well, guess what? It took you a year and a half to get up to these levels, a year. If you're a bear, it took 3 weeks to go downtown. Well, you better understand that what happens in that correlation, head-wise and money-wise and all of the above, folks.
And that's why we love being bears.
I love just fast markets,
Oh yeah, that's what I'm talking about.
There's no doubt.
You waited a year and a half for this as the bulls. You waited for this for 3 weeks as the bears. That's
a two-way market is totally where it's at, and I expect what you're going to see out here, folks. Okay, you are going to have a two-way market, for about a year and a half. And this is not, this is going to give more hope.
That brings up a question.
Yes.
You got all this volatility going on. It's been crazy last week, even crazier this week on a couple days. You think we're going to keep this kind of volatility for another month or so, or you think it's going to calm down?
Oh yeah, big time, man. We get action.
Nice.
You stay right there, folks. We get actually Basil's traveling, John Logan. We're going to replay that. Then we got our man, Mr. Nico and Paige. Darrell's going to be coming back here. Dave White, and we'll be back. Have a great one, Darrell. Thanks so much, man. Have a great one, folks.
Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.